Boom, and we are live. Welcome, folks. Welcome to Thursday Night Stock Charts Live. This is where we review the weekly price action of how we are poised to close out the week. But as I always like to say, we're going to go over the weekly charts, but there's one trading day left to go, and a lot can happen. We're going to talk about the president's comments this evening and where we're headed. And I didn't want to touch upon this topic, but if you watched it, there's a lot to talk about here. And I want to go over some charts of some other countries that have gone down this pike and others that haven't. So we'll talk about that. So let's get to it. First off, this is from Northman Trader. If you're on Twitter and you don't follow Northman Trader, you should. Very, very good Twitter feed. This is the S&P 500 up top and the VIX below. I think this is a pretty good overlay. Let's say hello to everybody. Abel, message retracted. I know Abel's here. Oh, there he is. Hi, Bob. Good evening. Can you please do a technical analysis of the chart of Viva Systems? Sure. Hey, Larry. Hey, Bob. You're only 40 minutes from Yankee Stadium. Did you ever take? Oh, yeah, many times. Oh, yeah. Yeah. I'm more of a, being a contrarian, I've probably seen more Mets games just because everybody as a kid loved the Yankees. And I could never understand it. I live on Long Island. The Mets were on Long Island. I lived in Brooklyn. They were over in Queens. So why not root for the local guy? So I saw more Mets games, but I have a bunch of buddies that are Yankees fans. And so, yeah, I've been over there many times. Old stadium and the new stadium. New stadium is wild. Really, really nice. So let's get to it. Before we proceed, we need to pay the bills. And let's just say hello to our sponsors over at TrendSpider. Folks, I was on a meeting yesterday with Dan over at TrendSpider. They've already come out with some new annotation tools, automated channel drawings. I played with it last night. I didn't get the hang of it yet, but it looks pretty cool. So I didn't spend much time. But really, really good stuff coming down the pike. They're going to be integrating TrendSpider with your brokerage firm soon. You're going to get alerts when your alerts fire off. I'm going to be having alerts put into our Slack forum, even for trades that don't fire off on. The ones that we review, like later on, we're going to be using TrendSpider to review charts that people request, and I'm going to have a Slack forum where you can go in and you can check and see if those alerts got fired off on. So more to come on that. I'm working with them to make that happen. So if you're not currently a member of the Contrarian Trader, join up. 14-day free trial offer. Get TrendSpider free. All right, so automate your grunt work, speed up your technical analysis, while all the while improving your accuracy. Reduce costly analytical mistakes and find winning chart setups with their scanning tools, and time your trades with precision with their trade alerts. And you'll see that later on. Explore the product. Use the link below, 30% discount code, all the functionality. Start your 7-day free trial offer. Watch the demo tour, nice little video, lots of stuff to jump around and watch. So good stuff. Check it out. TrendSpider. Let's get to it. All right. Again, 30% discount code below. All right. I watched I watched the president's comments on YouTube, and while it was what I kind of expected, actually a bit worse than what I expected, the video is no longer here. It was ratioed so badly that they took it down. It's no longer here. So if you want to get a feel for, and the comments were off. I think they're always turned off. So look at the ratios of dislikes. People can't stand this guy. So today, he did what was, I guess, inevitable. And I don't care whether you got vaxxed. I ain't a doctor. I'm a guy behind a mic. If you got a vaccine, bravo. You made an informed decision. Good for you. If you didn't get one, I respect your opinion. Your body, your choice, right? So It was so popular, they took the video down. And at the same day that he mandates what you must do with your body, you have his DOJ, and I would never have brought this up. I don't want to touch this with a 10-foot pole, this topic. My point is that they're telling the state of Texas, you can't tell a woman what to do with her body, yet the federal government's going to be able to tell you what you must do with your body, or else. Literally, or else. Here's the potato here. Biden unveils the most severe COVID actions yet. Mandates vax for all federal workers, contractors, and large corporations. And he'll get to the rest soon. As soon as the vaccine passports come out, they're coming. And from what I understand from, let's see if it's still up here. From what I understand, the news out of the White House from one of the few journalists out there is that Joe Biden wanted to go full-blown Australia, meaning lockdowns, camps, quarantine camps, what have you. So let's talk about Australia, which is where we're heading ultimately. Right now, it's a game of incrementalism. It's like the frog in the pot, right? So you turn up the heat slightly, right? And all of a sudden, it's too late. The frog is already boiled. So today we have a Australian health official shocks Sydney with New World Order comment. So they don't even hide it anymore. I'm not even going to play it because YouTube will ban it. I'm probably going to get banned tonight anyway. But they don't even hide it anymore, what their intent is. So, you know, at what point does the market begin to reflect this? This is all going to come back to the markets. This is not me pontificating about whether I think is right, wrong, whether or not you should like this video, please. What it comes down to in the end is what happens to the markets. Now, the S&P 500 is up about just shy of 20% on the year thus far. Let's take a look at how Australia's doing. Australia is up on the year. I've already looked. About 10%. Not horrible. Not horrible. But certainly not showing the alpha relative to the S&P 500. Then when you take a look at New Zealand, which has worse COVID lockdown restrictions than Australia, their markets are down over 5% on the year. Now, when you take a look at countries that are getting rid of COVID restrictions, they never lock down. Well, let's take a look at Sweden. They don't have a big central bank there that's printing out money. I don't think they're a part of the ECB. Maybe they are. But Sweden is more than the S&P 500. Sweden is outperforming the S&P 500, and it looks as though they all want to go higher. Consolidating, pausing perhaps, basing, maybe we'll get a move up higher. RSI is a bit overbought here. So I wouldn't expect, as we continue to see mandates come down from the federal government, and this is just the beginning. It doesn't end here. He said next month, more to come. So it's going to get more and more draconian, and we're only 8 months into his presidency. We still have another, year and 4 months before we flip Congress. Hopefully we get into Congress who we want to have in Congress, and they're not just rhinos. So we'll see what happens. But it's not looking good. It's not looking good. So yields plunge after spectacular 30-year auction. Lowest dealers on record. So if the dealers weren't buying, who was? Central banks? Well, it's going to be rough to judge by the Federal Reserve's balance sheet this week, because you had today was the 30-year auction. I think yesterday was Tues and tens yesterday. So the Fed balance sheet, and that was a good auction as well. And the Fed's balance sheet did rise this week, but not dramatically relative to prior periods. So I'll be interested in seeing how they expand their balance sheet next week to see whether or not it reflects the purchases of these 30-year bonds. Because remember, the further out on the curve you go to try to manipulate yields, the more expensive it becomes, a lot more expensive. So the Federal Reserve, it's pretty easy to manipulate short-term notes, much harder to manipulate longer-term bond yields. So with that, it's going to take a lot of capital. So this time next week, we're going to revisit the Fed's balance sheet, and let's see what they were doing today, whether or not they were in there buying up aggressively bonds. Because when you take a look, going to the weekly charts, when you take a look at bonds this week, I mean, cratering, down 1.75%. Now remember, yields were beginning to break out. Federal Reserve can't have that. So yields are pulling back. Is this yield curve controlled by the part of the Federal Reserve? We don't know yet. We don't want to draw a conclusion until we have a lot of data in front of us. Maybe, maybe not. Could it be that the bond market is forecasting bad things to come? That's entirely possible. Here's the TLT, the 20-year bond ETF, and money is moving big time into bonds. And certainly today, it moved out of equities. So what's the concern out there? Well, if you listen to Leon Cooperman, who was on CNBC today, if you listen to anybody that is open-minded about what is going on and refuses to listen to the mouthpiece out of the White House that came out today, and he blamed inflation, literally, on three things: pork, beef, and chicken. He made no comment with regard to rents, energy, and supply chain disruption, to include semiconductors. Meat, that's it. Protein, that's the only problem. Once we get over that, everything's going to go back to normal. This is what we're dealing with in Washington. In reality, when you take a look at the tip market, tips are in fuego. We were down earlier on the week at current. Remember, one trading day left to go. A lot can happen. But as it stands right now, we have an outside reversal week, a.k.a. a bullish engulfing. This is a buy signal, assuming that we close at where we're at or better on the week. Very, very bullish stuff. This is not the market saying that inflation is transitory. Folks, we hit new all-time highs today on the tips. So what did that do to the US dollar? Or what helped the tips spike up higher? Or what is the impact of inflation on the US dollar? We're up on the week. It's not being magnified on a weekly time frame, but I'm going to be interested to see. This has got to be updated. It's not updated. This is still of the 8th. Stockcharts.com. Get your act together. Let me bring up the UUP. Okay, so here's the weekly chart of the dollar bull ETF. And you could see that stochastics, we pointed this out last week or the week before, possible lower high. Looks like we're getting that. Now we have a breakdown to new lower lows on the US dollar. This week, a gap up. Remember, last week was an abysmal week. This week, a gap up, short squeeze. They tried to recapture support. Today, rejection. We slid off the highs of yesterday, closed down on the day today after gapping down. They tried to rally it back. It was rejected. So, with the events, with Australia, New Zealand, other countries being the how you say, the roadmap for where we're heading right now. I'm not exactly sure, especially after Afghanistan and the loss of stature. I'm not exactly sure why you'd want to own U.S. dollars, but it's setting up for a potential break here. So look out below. The VIX weekly chart. I mentioned last week that, at least on the week ahead commentary, I should say, we broke out last week. It's hard to see it here, but we broke out last week. This week, a continuation breakout. We do have resistance above at that 1950 to 20 mark on the VIX. Let's see whether or not we begin to see some projections moving forward of fear of what's next. What is this potato going to do next? So nobody knows. He's now governing by mandate, and frankly, you don't have Congress to help. Even if it was a Republican Congress, I wouldn't trust him to begin with. And if the legislature, going back to the Obamacare decision, Justice Roberts, Chief Justice Roberts, who's supposed to be a conservative, he's repeatedly shown himself to be a rhino. He doesn't judge. He doesn't decide by the Constitution. He wants to get invited to tea parties and cocktail parties in D.C. And we know probably which way he's going to go, because tonight's mandate is going to the Supreme Court probably within the next couple of weeks. So we'll see which way he floats. The Dow Transports weekly view, down 2% on the week. And it kind of gets worse from here. I mean, I'll go over that on a daily chart. But folks, market breadth is really deteriorating. All we've had the past few weeks holding this market up are consumer discretionaries, Amazon, Starbucks, and tech, the Tues. For which, for those out there that are curious, yeah, I'm still short. And yeah, I am looking to add. But we remain net long of the market. So the transports, lower highs on RSI, breaking down. We'll see how volume rolls in tomorrow. It may come in just shy of last week's volume and well below the moving average. Lower highs on Ultimate Oscillator. So it's clear momentum is waning here, right? Stochastics, lower high. And we have a new week over week lower low. And the transports are your canary in the coal mine for the market. And when you take a look at a daily chart, it only gets worse, because I held out the possibility the other day that, we may consolidate here. We may hold this support level while it looks like we're putting in a lower high, and we may just break. Let's look at both sides of the coin. This may be a higher low, but today that ended. We broke today, and it looks as though we are probably going to perhaps rally back, try to recapture 14,600 on the Dow Transports, and then roll over. Watch 14,080. If that breaks and we close down below that mark, all hell's going to break loose, because that's a confirmed breakdown on the Dow Transports. Lower highs, lower lows, and you have a new direction to the downside, a new trend, which is to the downside. Volume, well above average today. Stokes, a disaster area. Weak and getting weaker, as members hear me say and longtime viewers, when you have stochastics down below the 50 mark, rallies tend to fade. Don't chase the rally. They want you to. Don't get suckered in. The Dow Transports, weekly chart. Let's make sure this is updated. Yes. One trading day left to go. But on the week thus far, we have broken support. And RSI has broken support. For all I know, we're going to close at the highs of the week. We have one trading day left to go. This is just a glimpse as to the possibility of how we may close out the week. I am not making the call, but as it stands right now, it doesn't look good. Look at this. I drew this line a few weeks ago because whenever I see choppy price action, I really don't use Stoch RSI for much, but whenever I begin to see chop, a struggle to rally up and through the neutral mark here, I take my crayon out, I just memorialize it, and it's good to see looking in the rearview mirror that, you know what, you were onto something way back when. And now here we are trading down below a critical support level. And this gets better because remember, we had broken out the week of August the 2nd. And I said that the longer we keep retesting this breakout point, the less the probability is that we see a continuation breakout. Because I like to see one retest, two retests of the breakout point. Well, you had that. Retest 1, retest 2. Good stuff. Retest 3, you know, start showing me something. Start showing me the breakout if this is for real. Fast forward. We are back down below support. One trading day left to go. If you're long, you want the market to rally, hit the like button, please. Daily chart. Now, the daily chart, it got off to a strong start. But remember, Stokes putting in lower highs and trading, as they soon will be, effective tomorrow in all probability, down below 50, rallies tend to fade, folks. Rallies tend to fade. So don't chase the morning rallies because a lot of people out there have forgotten what a correction looks like. I've caught more heck over the past several weeks about having any shorts on the table. God forbid they're a hedge. It's not as if you're not part of the narrative that stocks must go up constantly. At some point in time, this is not going to end well. I'm not saying that this brief and minor correction is anything. It may just be a blip on the screen. I've come to resign myself to that. That's why I started selling a lot of market neutral options back in April. And I've been less heavily long the market, less short the market, and just been more market neutral. That's just been the game plan. And it's worked out well. So, especially during earnings. So, the Dow Jones Daily View, bearish key reversal bar on the day. We closed just shy of support. Volume was light. So, here's what's absent. You're not seeing, and this is why I want to be very, very careful with what I'm saying. You're not seeing rising institutional distribution. What does that mean? What that means, you had 2 days of distribution, the 31st and the 1st. Then again on the 7th. Now we're quieting down. Really, what I'd like to see is a break of support with rising down volume. If we begin to break support levels on rising down volume, that'll give me the impetus to lean into the short side a bit more. I can't. Not now. Not with the Federal Reserve manipulating the market, probably given the yields today, manipulating the yield curve. How do you fight that? So I'm very reluctant to go adding to shorts right now. Although we do have a lower high, a potential for a lower low, we're not there yet. Indicators are quite ugly. We're going to wait it out. Weekly chart, S&P 500. We are now down on the week by a percentage point, or just shy of a percentage point. Volume's going to roll in very, very light. So I look at this chart. I look at the price action and I say, yeah, in all probability, all we're going to do, if anything, is retrace back down to the lower band of support and probably catch a bid. I don't want to short this. Now, if we break down below this support level and we vacillate for a few weeks and then begin to roll over, different story. Then I'd be looking to lean into the short side. Not now. One trading day, 2 trading days does not make a trend. Stokes are very extended. RSI is rolling over here. 1 trading day left to go. Daily chart. I knew this didn't look right. It's a second weekly chart. Okay. Daily chart. Let's take our crayon out. I mean, volume is light. The technicals are not looking good. But until such time as you get institutional distribution, I don't think you could short this. I don't want to be roadkill. Now, the IWM, this is a different story. The IWM, I've had a short position on here since March. Not overly aggressive short. There are a couple of times where I thought I needed to stop out, namely 2 weeks ago. But I said, you know what? Stick by the courage of your convictions. Why? You know, each Sunday, I go over the Buffett indicator. And at current, we are 3.1 standard deviations beyond the historical average. This is what this looks like. This is insanity. So, honestly, when people pose to me, you know, how could you possibly have a short position on? How can you possibly have that? You know, I'll pose the question back to them. How can you possibly go to sleep at night without having a hedge on? How could you possibly go to sleep every night, net long the market, margin to the hill on the most high beta junk known to man with the Buffett indicator at strongly overvalued levels, and the only hope that you have is that you don't get a massive spike in the 10-year yield one day driving this market like a pile driver into the ground. Because once we get that, major problems. But yields are pulling back. I don't expect much to the downside. Maybe a correction. Maybe. But once this goes, that day comes, you're going to wish. Because it's going to happen quick. It's going to happen really quick. Westlaw, it is buying time. It is consolidating in a bull flag. Probably it shoots up next month. You mean the IWM? Well, we'll see. We'll go back to it for a second. All right, we have 1 trading day left to go, right? And you could be right for all I know. If I had the courage of my conviction, I'd mortgage the house. I'd short the IWM on margin. I don't have that. I've been very deliberate with shorting the IWM. So, you know, before we go back to the weekly chart, take a look at the monthly chart, which is the reason why I shorted the IWM to begin with. That was way back here. We were trading above the third standard deviation Bollinger Band on a monthly chart. This is an index. Think about it. This is an index. Yet all it's done is trade sideways. And last month, I concurred with you. I said going into September, I may have to stop out of this position because what happened last month? A bullish key reversal bar. I'm not going through life with rose-colored glasses. And I said it publicly. I'm saying it again. If we reverse and we move towards the highs of the month, or if we break out to new higher highs, we're going to have to stop out. Going to have to do it. But as it stands right now, you go back to that weekly chart. We broke out the week of the 23rd of August. We retested and held the breakout point the week of August the 30th. This week, at current, one trading day left to go. Right? So to be fair, honest, not speaking my book, we are at current trading down below key support. If we close down below this support level, there's a very, very good chance that we retrace, as we've done multiple times since March, all the way back down here from a high of, what was the high of the week? 229, 230, down to 210. Because usually when you get a breakout point failure, also known as a bull trap, when you fail to hold that breakout point, you did as we did back here, back here, back here, back here, and here we are again. You retrace back down to the lower band of support. The question is, if in fact we do flash this breakout point failure, and we close back down below support, and we retest 210, do we hold? I think that what is going to matter is if you begin to see the S&P 500 roll over in earnest. The small caps are not going to outperform the S&P 500. People are going to get stopped out. Margin calls are going to get let loose. Many of the small cap stocks they don't carry 30% margin. Your 50, 60% margin requirements. You want to free up capital. Guess what you're selling first? Or forced liquidation. Guess what they're going to sell first? Your small caps. All right, Tues. Let's update this. So, we've been here before where we've broken out above the upper band of a rising uptrend channel. And frankly, what you did is the market's been so strong, you adjusted your upper band of your uptrend channel higher because you're not allowed to have corrections anymore. You're not allowed to have retracement back down to the rising 20-period moving average, 50-period moving average. Hell, we haven't touched the 20-period moving average on a monthly time frame, monthly time frame. April of 20. Think about it. But this is still a strong chart. I will say RSI above 80 is overbought, but we've been higher before. No reason to go shorting more. Weekly chart. We did put in new all-time highs this week. We are down slightly. Volume is going to roll in very, very light. So you have no net distribution here. The thing is with the Qs, and the stocks that make up the Qs, what are you going to do? Are you going to buy a bond? What, for 30 years? It's negative real returns. And that's what's keeping this market up higher. You can't despite the fact we had a rally in bonds today. That was a fear trade. And you had a good bond auction. But I think that was the Federal Reserve. But who's going to invest their money for 10 years, 20 years, 30 years and want real returns of negative? You got to pay the government. You get paid your interest, and you give it right back to the federal government, literally, at least a portion of it. It's a good deal for them. Next year could be risky as higher taxes are coming. Yes. Especially in Q2. Daily chart, Tues. You know, the thing that jumps out at me here, I'm a big Stoke guy. I like the Stokes. Love my RSI, love my Stokes. And both are beginning to roll over on a daily time frame. But we'll remain in an uptrend. For all I know, this is a sideways consolidation, and we could be headed up higher. Why? Look at volume. This is not Goldman Sachs selling today. Maybe a little bit. This is very light volume, and it declined from yesterday's volume. So no cause. MACD may go negative, but no cause to go adding more to the short side here just yet. The banks. The banks have been flashing warning signs for a while now. These lower yields are not good for the banks. So if you're looking for an opportunity to buy the banks, I don't think now is your time. Look at the choppy action here on Stoke RSI. If you believe that bond yields are going to move up higher very soon, now is the time to buy the pullback. But after today's price action, I think we had a decision made on that for us. Now, the banks actually closed up higher today, but they declined off of their highs. Stokes are down below 50. What happened? Rallies fade. If you bought this rally at the open, you got sucker punch. Pay attention to your Stokes. Very light volume. I would still avoid the banks. It's not time yet. Technology, weekly chart. A down week by just shy of 0.75%. MACD histogram losing momentum. Qs, same thing. Daily chart. What time we got here? Good, we got time. Daily chart. The other night on Market Wrap, it looked as though we were going to break out, and we did not. Yesterday, we retraced back down to the lower band of support. Today, another down day. Stokes rolling over, RSI rolling over. Volume, non-existent. Doesn't exist. The semis, weekly chart, down 1%, a little more than 1%. New weekly low. Very light volume on the week. No changing that. Daily chart. Closed up on the day. Volume very light. Biotechs. Weekly chart. This is a leveraged ETF, so they're flat on the week. Last Thursday, we were trading. We had closed above this resistance level, but tell you, and it looked great. It looked like you wanted to buy it. By Friday afternoon, we had given back a lot of those gains. So that's why I say one trading day left to go. So be careful with any observations that you're making on a weekly chart on a Thursday night. They tried to rally biotechs today, rejected. What did mRNA do today? Blowing up. I'm wondering if we get a sell the news event tomorrow, because it looks like the announcement may have been priced in today. Larry, Enbridge is buying Modia Midstream at a bargain price. Great acquisition. Should move this higher. Send ENB higher. We'll take a look at the chart. When they announce that, Larry. Naresh. Hello. That's a good point. Quad witching next month. Hey, Denny, how you doing, pal? Anthony. Hey, Bob, you're looking dapper. Thanks for that. What do we got? XLE Energy. I was listening to Leon Cooperman earlier today. He's been buying up energy stocks. Volume is very light on the week. You got to take a look at two things when you're looking to buy energy. 10-year yield, it's better if it's moving up higher, and the price of oil. We'll go to oil in a second. We're up on the day, potential higher low. Volume was decent. Let's see how we closed. Yeah. That was volume. Yeah, a lot of selling into the close, but good buying here. So we'll keep an eye on energy. There's maybe something happening here. Natural gas, weekly chart. En Fuego. Monster. Up 12%. This is a leveraged DTF. Up 12%. BOIL. B-O-I-L, the symbol. Daily chart. Bananas. Look at that price action. Volume is still good. It's probably going up higher. Oil. Weekly chart down on the week. Energy down on the week as well. Daily chart. Where's my daily chart? There it is. Big volume. $15-minute chart. Doesn't look good. All right. Rough day. Rough day. Emerging markets. Reversal week. Bad week. Started off good. All right. Gold. This is the monthly view. We're looking for a breakout of this cup handle formation. Last week we were up. This week we're down. Let's go to the weekly chart. Brutal week. Down nearly 2%. And what's disturbing about this is that yields are down. If you take a look at the daily chart, we were up at one point. Did we close up? Yeah, we did close up. Good reversal bar. The miners didn't respond. Gold did, which is a good thing. But You have Stokes that are going to be down below 50 again. We're perpetually down below 50 on gold. Piss me off. So, nice price action today. We got slammed on the 7th. But what we did is we retested 2 support levels and we've held. And we saw a reversal bar. So let's see if we hook back up on these Stokes. It's going to happen really, really quick. Gold mining stocks broke support on the week. 1 trading day left to go. These are the junior miners. Daily basis held support. Volume still high. Silver miners down on the week. Gave up support from last week. Leave it off with silver. Down on the week. Over about 5.5% to be exact. Let's take a look at a daily chart. I think they closed up today. Yep. Closed up. All right, so those are the weekly charts. Let's do some chart requests. See what I have in the members area. Bear with me, folks. We have 13 minutes. All right. SPCE. Joe. All right, let's see what we got in the chat box. Yeah, DocuSign was, I think DocuSign is a tell. Was very disappointed in that price action. We'll take a look at it. ENB agreed to buy privately owned Moda. All right. VEEV for Able. All right. Larry, do you want me to go over the chart at Enbridge or no? Okay. Let's bring up our friends over at TrendSpider. I was playing around with this earlier. I changed it black. How do I change it back again? I forgot. There we go. Okay, let's do it. SPCE. Vigen. Well, we're holding support at 24.53. I hate the Stokes. Stokes are really weak. Let's go to the weekly chart. Weekly chart, good week so far. We're up just shy of 6%. Multi-week consolidation. There could be a swing trade here up to that 28 level. You're going to meet some resistance up there. Stokes still correcting. I would look to see how we close out the week. See whether or not we fade like we did last week. We had a little bit of a fade this week, big fade the prior week. This is what happens when these stocks are losing momentum. That's their job, to tell you what momentum is. Daily chart. This is better. But the weekly chart takes precedence over a daily chart. So we had a bullish reversal bar on the day. Here are the automated trend lines. That's the algorithm. Here's where we found support in blue. In green, that's resistance. Watch for a breakout. Space firming up. Weekly charts, monthly charts, still a little bit iffy. So you may get some false breakouts here, and that could go up for a while. So just be careful. Joe? You got it, Larry. All right, so we paused here. We identified this breakout back here. Nice run, but thus far in the month we have a bearish reversal bar early in the month though. Do we have opportunity on a weekly time frame? I think we're coming in here. Joe, for those not familiar, is a leveraged ETF. It's not a leveraged ETF. It's an ETF that puts you long of coffee. So that way you don't have to play the futures market, but it is volatile. I'm going to keep this active for a while because I really love the price action here. Big volume on the week. I think we're pulling back to this 49.90 mark. Daily chart. Yeah. Here's the value of the automated trend lines. For those folks just joining, TrendSpider we're using, 30% discount code below, automated trend lines. So, nice rally here. But look where we got stopped dead. Right at resistance, and we sold off. Wouldn't it have been nice to have had a alert set up here for when we touched, bounced, and you could have known to at least take some profits on the trade. So it looks as though we're going to pull back. I already have an alert set right there, so good enough. 49.90. I like that price. Stokes weakening up here. I would avoid Joe right now. I think you get it at a better price. DocU. All right, DocU really, really disappointing this week, but it's a tell. You know, I did a commentary on this last week because DocU had broken out, and I wasn't just doing the commentary on the technicals. I was doing it on the fundamentals as well. And it wasn't my fundamental analysis. I outsourced my fundamental analysis to Investors Business Daily. So I used that ranking system. So the prior week, we had broken out and we closed just off the highs. This week, I expected a pullback and a retest. That's why I have an alert set here. So the pullback was no great shock. The severity of the pullback, the rate of change, was a surprise. Now, tomorrow's another day, one trading day left to go. If we manage to rally back and close back above this support level at around, let's call it 288 to be safe, then it becomes interesting again. Right now, we're trading down below weekly support If we close there, there's a good chance we're going lower. So I would avoid. I would avoid right now. Wait and see how we're poised to close tomorrow. Yeah, it could be profit taking, or it could be a tell, right? It could be that, you know, you had earnings on a leadership stock. It's not a cheap stock. And when you start seeing your leadership group, those high growth companies begin to roll over, then you got to wonder, all right, is there anything else behind this? And what happened soon thereafter? The Tues started rolling over. Microsoft weakened up first. Apple took charge. Apple then started to weaken up. So now you have your high flyers, which are beginning to peter out here and break down potentially. This is a weekly chart, one trading day left to go. But you also have your mega cap stocks losing a little bit of steam. So you could say, yeah, profit taking, sure, I could buy that. But you could also view it as being a tell that the people are taking profits on the leadership names because they're high volatility. They're expecting danger ahead. Don't forget, market breadth has been declining dramatically, and we're only being led up by the high-tech leadership names. Amazon is in the consumer discretionary index as well. That's been making higher highs. So it's influencing consumer discretionaries. So DocU, let's see if we close back above, what did I say, 288 per share? As a matter of fact, let's amend this alert. Now I want to know, do we recapture it? I don't want any sensitivity. Get off. There you go. All right, so our alert is set. Now, what if it doesn't rally back? Well, what I would do is create an alert down here. I like the company, so I'm going to keep this alert active for a while. We'll keep some sensitivity on. That support level's at around 265 per share. Daily chart. Yeah. So again, you're using the automated trend lines. They're telling you, actually they told you here, you needed to be out. You broke some support, two support levels on the 8th. Today they tried to recapture and were rejected. Stokes are down below 50, and declining rallies tend to fade. I hope that it rallies back and closes back above that weekly support level. If I bought it there, I would stay very small because my daily Stokes are losing momentum, and that does not instill confidence in me. So I would be very, very careful with DocU right now, despite the fact I like the company as a whole. The shares just aren't performing. Westerlaw, there was support at 260. I had 280, then 260. If there's no big volume, when it pulls back, it is profit taking. Well, you have decent volume. Volume's going to roll in about average. So this is fairly decent. You have one trading day left to go. So it's pretty decent volume. I'm not going to argue the fact it's profit taking because we broke multiple support levels. So you're going to have a lot of stop losses triggered on that. And frankly, you have a lot of technicians that probably sold on this very close to being an outside reversal bar. So I'm not arguing the point that it's profit taking at all. All right, what else do we have? VEEV for Able. Is this a telecom? Monthly chart's under a lot of pressure. Weekly chart's under a lot of pressure. Support broken. And this is critical support. Healthcare? Okay. Thanks, Westlaw. That's been a good performing sector, too. Daily chart. All right, so rallies are being sold here. And again, the value of the automated trend lines. All right, so here's my manually drawn one. The algorithm's picking off another one here. Stokes is still declining. I think you got to wait on this one. We could retrace all the way back down to 293 per share. This is a daily. Keep it active for a couple of weeks. You know, if it recaptures the support level in the next several days, okay, that's good. But as it stands right now, it looks as though you're seeing money move out of Viva. The one good thing here is that you're seeing down volume come in lighter, which is always good to see. Enbridge. You're still down below resistance, Larry. $40.06 to $40.20. I would go with the higher number. $40.40. Critical resistance. Right now, we're struggling. You're in a trading range. Let's go to the weekly chart. A lot of resistance up here. $40.65 is a good number. That's what the algorithm's picking off. Another resistance level. I'll share this with you, Larry. All right, folks. With that, thanks for joining in. I appreciate you being here. Don't forget TrendSpider 30% discount code below. I give it away free to silver and gold level members. Head over to the website, and again, link below. Everybody have a profitable trading day tomorrow, and I really appreciate you being here. And enjoy the weekend. If I don't happen to speak to you, be well.